This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC oil output rose in July, a Reuters survey found on Friday, as a rebound in Saudi Arabian supply and small increases elsewhere offset the impact of ongoing voluntary supply cuts by other members and the wider OPEC Plus alliance. The OPEC pumped 26.70 million barrels per day, BPD, last month, up 100,000 barrels of oil per day from June, according to the survey based on shipping data and information from industry sources. The increase comes despite OPEC Plus, which comprises OPEC and allies such as Russia, keeping in place most of its output cuts until the end of 2025 to bolster the market in the face of tepid demand growth, high interest rates and rising U.S. production.
China's slumping consumption of diesel, as use of LNG-powered trucks grows, is weighing on domestic fuel demand, with forecasters warning of further risks from a sluggish economy hobbled by a prolonged crisis in the property sector. While the world's second-largest economy was long the growth engine for global oil demand, its peaking appetite for transport fuel, as an energy transition gathers pace in a sputtering economy, is now dampening world markets. In the second quarter, global oil demand growth was its slowest since late 2022, driven by a contraction in Chinese consumption, the IEA's July oil market report showed.
Moving on to the top news in the energy sector.
Indonesia's biodiesel consumption in the first half of 2024 reached 6.12 million kilolitres, data from the Energy Ministry showed on Friday. Indonesia, the world's biggest palm oil producer, allocated 13.4 million kilolitres of palm oil-based biodiesel for a B35 blending mandate in 2024. Indonesia is planning to increase the share of palm oil blended into biodiesel to 40% from 35%. Which could take biodiesel consumption up to 16 million kilolitres next year, the ministry said. The government has started to test out the B40 fuel on a train and will pilot its usage on agriculture machinery, power plants, and the shipping industry.
Oil prices fell on Friday, settling at their lowest since January after data showed the U.S. economy added fewer jobs than expected last month, and weak Chinese economic data added more pressure. Brent crude futures settled down $2.71, or 3.41%, to $76.81 a barrel. U.S. West Texas Intermediate crude futures settled down $2.79, or 3.66%, at $73.52. At their session lows, both benchmarks fell by more than $3 per barrel. U.S. job growth slowed more than expected in July and unemployment increased to 4.3%, pointing to raising fears of a possible recession. Next, we have the top news in metal markets. Gold prices retreated on Friday as profit-taking kicked in after bullion jumped over 1% earlier in the session on hopes of rate cuts buoyed by weaker-than-expected U.S. jobs data. Spot gold fell 0.5% to $2,432.19 per ounce as of 2:34 p.m. Eastern Time, 18:34 GMT. U.S. gold futures settled 0.4% lower to $4,769.8. However, gold gained 1.8% this week as rising safe haven demand due to Middle East tensions and expectations of rate cuts by the U.S. Federal Reserve made the metal more appealing for investors.
Dalian iron ore futures prices climbed on Friday but were on track for a weekly loss as traders assessed the consequences of a wave of production cuts across Chinese steelmakers amid the top consumers' faltering steel market. The most traded September iron ore contract on China's Dalian Commodity Exchange ended daytime trade 2.16% higher at 779 yuan, $108.09 a metric ton. Still, the contract lost 0.13% this week. The benchmark September iron ore on the Singapore Exchange was 1.41% higher at $104.01 a ton, as of 0730 GMT.
We will now look at the top news in the agricultural sector.
Chicago Board of Trade, CBOT, Grain and soybean futures turned higher on Friday as market participants and fund traders scrambled to cover their hefty short positions on signs of the U.S. economy weakening, market analysts said. But corn and soybean prices still hovered near four-year lows on large global supplies and as forecasts for cool, rainy weather in the U.S. Corn Belt improved the crop outlook. The most active CBOT soybean contract settled up 10-3/4 cents at $10.27 -1/4 per bushel, while CBOT corn ended up 4-3/4 cents at $4.03 -1/4 per bushel. Both ended the week lower.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.